So we've got some volatility in our stock markets, and this time not all driven by the Fed. With recent events in the Middle East, volatility in our stock markets, and especially the energy markets, usually follows. Shares of energy stocks have jumped because of this, and there's been some follow through that has continued. But not only has the energy markets jumped because of the Middle East, there's also been a lot of other things at play here as well that we should talk about, such as AI. Artificial intelligence is drawing huge attention to the energy market as the need to run these complex servers is just immense to run all of the AI, and it's only going to get bigger and bigger. Just take a look at Microsoft's recent deal with Constellation Energy to go nuclear. Very interesting. Did you think you were going to see that again? Not many did, and that's why Constellation jumped quite a bit recently. No one, or I certainly didn't think that 3 Mile Island would be starting up again to harness nuclear energy, and a huge deal for both of those companies. With all this being said, things are changing, and this creates opportunity for you and I. So let's take a look at 3 opportunistic plays in the energy sector and see where they go. So in an earlier episode, we highlighted some midstream energy companies. That would be Hess Midstream, Western Midstream, and then Energy Transfer. Strong cash flow producers in the space. Haven't changed my thoughts or interest in those. But one to highlight today that we didn't talk about before, which is really a different kind of energy company, is Enbridge. So Enbridge, out of Canada, of course, has a fantastic yield at 6.6% and has been a dividend grower. Enbridge has the pipes, has the power production, has renewables, and it's got a fantastic track record for everybody. This stock's performance has been coming back as of late, sold off a lot last year and is recovering now, but there's still plenty of room to play in this space. Last year, of course, was a watershed year for them at Enbridge as they purchased 3 gas-fired power production plants. A lot of people were concerned that this was going to be debt heavy and it was taking them into a space that they shouldn't be. Enbridge seems to have known better and made this very timely acquisition that I think is going to pay off quite well for them. So the value looks compelling in the space as well. Also, Enbridge has a large renewables business, so touching wind and solar, and these are growing operations for them. This is a pretty well-balanced energy play and could fit quite well into your portfolio. So the next company to talk about is Brookfield Renewable Partners, or BEP. Interesting play here as well. 5% yielder. They raised their dividend on an annual basis. Performance is coming around again. As you'll take a look at the 5-year chart, it went sky high, then it came back down again. Now the interest has picked back up again in the renewable and energy sector. So it could be a good time to get in on this. Very interesting company. Hey, look, they've got power production. They've got the hydro, solar, wind farms, and interesting. They also have a deal with Microsoft that was made back in May. This is a $10 billion deal, and that's to produce clean, renewable energy for Microsoft. So quite intriguing, quite interesting. And another energy play to consider, in addition to Constellation that had that big deal announced with Microsoft recently. So the value looks very interesting. Performance is coming around, and it looks undervalued to me. A good yield, good dividend on this company, and I'm adding to positions going forward. Take a look for your portfolio as well. So the last energy play, which is more of a traditional energy play that I wanted to highlight today, is BP, or British Petroleum. I haven't owned this one in quite a while, ever since they had the Gulf of Mexico oil disaster long time ago. I got out of those shares. I just didn't like the direction of where things were going. But things have really changed here. There's lots of leadership changes, parsing down the portfolio, refocusing certain things. And I like where BP is and where it's going. Currently a 5.9% dividend yield on BP, and that's actually increased 10% this year. Performance has been abysmal. So that actually creates a great opportunity for you and I to get in, increase or establish a holding in BP, collect the dividend, and let the market do what it does and recognize value over time. I guess some fun facts about BP is they are big into solar, so they've got a big renewables. They recently they're exiting some of their wind farm activities, and of course they're big into traditional oil and gas, which isn't going anywhere. They also made headlines earlier this week with a deal as they are scouting for deals outside of their traditional markets, and they're going bigger or look to go bigger in India. Take a look at BP and see if it fits in your portfolio. I'm starting to nibble on this one. I just like where it's at from a value perspective, a dividend perspective, and an exposure perspective.